What's going on, investors? AK from Fallible here. And today I want to talk about a mental model called Ruthless Reductionism. Now, this mental model should help you simplify your trading process so that you can become more profitable. And if you remember from my previous video, you know that simplicity always wins out over complexity in the markets. And we're going to discuss more of why that's true in this video. But if you haven't seen that previous video, make sure to check it out. I'll link to it above. Okay, so Ruthless Reductionism, what is it? It's got to be more than just a fancy phrase that kind of feels good when you say it. You know, it's a real earthy, kind of meaty type of phrase that feels real good in your mouth. No, the concept of ruthless reductionism is extremely important because the truth is when you're dealing with the markets, complexity always tends to creep into your trading process. And there's a reason for that. There is just so much info nowadays and it's all free and it's all just coming at you at the same time. You got so many lines and indicators on your charts. You got real-time news feeds, Twitter, talking heads, newsletters, and worst of all, you just got all these YouTube videos. Oh man, those are the worst. I hate YouTube videos. So nowadays that information by itself is not an edge. Everybody has it. It's free and easily accessible. So the real edge comes from taking all that information and picking out what's actually important. You got to reduce that heavy flow of information into actionable ideas. And the rest of the stuff, you know, the fancy stuff that you're not actually going to use, well, I guess you could just save that for a cocktail party or wherever people are trying to hear you talk. And you know what? I've never been invited to a cocktail party. I've been invited to a cocktail hour that, you know, for a wedding, there's hors d'oeuvres or I don't know how to pronounce that actually. Hors d'oeuvres? Oh, okay, too soon. But okay, if you find yourself at a cocktail party talking to some guy named Warren, okay, then you can pull out the fancy stuff. But otherwise, keep it out of your trading process. See, and that's the thing, because a profitable trading process is actionable, measurable, and very easily understandable. So if you're looking at your trading process and you got all this random stuff and you're not even sure how it all contributes to the actual bottom line, then whatever you can't figure out, you just need to toss out. Because the most important point of having a process is so that you can evaluate the results properly. And you know, I've talked about the importance of a trade journal before, right? Which, by the way, if you haven't seen that video, link to it above, check it out. But the point of a trade journal is recording how the process is working out. You're recording results, how you feel, how you're executing on it. You're just recording variables that you can analyze later so that you could adjust and improve. But to successfully do that, you actually got to know which variables are important. So if your process is just way too convoluted and you're recording everything and you don't really understand what does what, then if you have a bad trade or a string of bad trades, you're not going to be able to identify what the problem is. Is it the way you read the chart? Was it your trade management after you got into the trade? Was it a psychological, emotional thing? Correlation issues in your portfolio? Was the macro off? You know, who knows? If there's too many moving parts that you don't understand, then you're not going to be able to properly evaluate what's working and what's not. And I'll tell you what, one of the best ways to go through your process and figure out what's working and what you need to throw away is to actually take apart each part and physically write down what it does. Now, I say actually write it down because if you just think about it, you're going to convince yourself it's important when it's not. When you're writing it down, that's when you're going to get into the guts of it. And you got to write it like you were going to get it approved by someone. Basically, you got to convince that someone that it's important. And really that someone is yourself, but you get the point. So that moving average that you're looking at, why exactly are you looking at it? Is it actually helping? How do you use it? Why do you have Fibonacci lines on top of the moving average? How do those things work together? These are all types of questions that you could ask about your trading process so you could really break it down. And if you want to keep winning in the market and keep your edge, then you have to be able to analyze your process. And because complexity is always going to be creeping into your process, you got to do your best to ruthlessly reduce it out of there. And let me know in the comments right now something you've taken out of your process recently that you realize you weren't even really using. It wasn't contributing to the bottom line. And pretty soon I'll be releasing another video with another mental model to help you do this further. I'm talking about Occam's razor. And if you want to see that video, then make sure you subscribe to this channel and hit that bell for a notification when it comes out. And in the meantime, stay fallible out there. Bye.